Okay, that's called the distress asset advantage. We'll be breaking it down and going through exactly what we've got going on how we're getting these deals at that event. Okay, let's switch over to the news now. First and foremost, what we want to talk about is the housing market is starting to pick up in some of the most expensive regions in the United States. I'd like to know from you, let me know in the comments, which markets do you think, before I reveal this, which markets do you think are going up right now? I know that we've seen a long stall ever since those rates just kept ticking up and ticking up and ticking up. About a year into it, all of a sudden we saw buyers in the single family housing market go on strike. By the way, that's completely different than the commercial market, but how about in the single family housing market? Which markets do you think are starting to pick up steam, or which one do you think are you feeling it? Maybe you're living in one of these markets right now. The results on this, they're a little bit shocking. Well, not overly, but they're saying in this article that Seattle, Los Angeles, San Jose, big markets where people are paying a lot for single family houses, they're still ticking up. They're going up while the rest of the country is kind of coming to a standstill. Some markets have actually churned and gone down some and settled a little bit. Those markets are still ticking up right now. So it's interesting to see that in the midst of buyers still being on strike. There's some markets that are still going really strong. Similarly, there's some changing demands in the real estate market for commercial. What happened during COVID to office space? What happened to office space during COVID? Everybody was sent home to work, and we had a whole bunch of people working on Zoom. Zoom stock went through the roof. So did all the other video conferencing platforms. They went through the roof. And meanwhile, office buildings plummeted in value. What's happening to change that? These vacant office spaces, what are they being converted into? How are owners diversifying? Well, there's a couple of trends I want to talk about. Number one, I've looked at a lot myself, is converting office space into apartment buildings. Okay. That's very expensive. We have not pulled the trigger on any of them. I don't know that we will unless there's some huge government incentive tied to it, because the core of an office building, it was built very different than an apartment building. You have wide open spaces that weren't separated. You have mechanicals, utilities, air conditioning, heating, etc. That's all per floor. And you'd almost have to basically duct the entire central corridor of an office building to convert it to an apartment. So that is possibly an emerging trend. We've seen some of it happen in New York, where the government's given big subsidies for it. And we saw it happen in Detroit, where the government's given big subsidies for it. But it hasn't been a global thing, or a nationwide thing. What has been happening nationwide, though, are conversions into data centers. Number one, you can see right here, data centers. This is basically where they keep a whole bunch of servers powering some of the tech-based companies, or selling or renting online server space. So data centers. And then the other big one that we've seen quite a bit of is folks converting them into self-storage. There's a few different groups out there that now they've specialized in going into urban areas, finding abandoned office spaces, and they're turning them into self-storage right in the middle of the city. So it's interesting to see the trend that's happened since the COVID-19 pandemic. Okay, let's move over and let's talk about, I want to go into this article. Inman thing, it got me. I had the article taking it away from me. I want to talk about a little bit more about the commercial trends as a whole. Let's see if they're going to allow it. They are. Okay. Commercial trends as a whole leading up into the election. Where are dollars going right now? Association of Realtors, probably 5 other groups like that. Where are they donating their dollars for tax time? If you would have looked at a study on this a decade ago, maybe even 2 decades ago, you would have assumed, based on the study, that most of the dollars politically are going towards the right side for real estate. But what's actually happening right now is most real estate, big companies, big conglomerates, associations, etc., are putting their dollars towards the left right now. How might that influence the election? Now, that's a coin toss. I'm not going to get into the political debate on this, but I found it fascinating to look at where dollars are actually going. And a lot of them are going through a site called ActBlue. And in the depths of this article, it goes in and says, anyone that's identified as realtor, anyone that's identified as part of an association that puts monies and dues towards these groups, most of the monies in comparisons, whether they go right or left, they're leaning towards the left. So the greater landscape of real estate professionals is leaning left with their dollars and where they're putting them. Interesting to say the least. Okay, cool. I need to get in and cover. Sue, what do you think about that? I know you're ultra political. What do you think about that?
I'm the least political person probably on this call. I can't even watch the news right now, so I'm not a good person to ask.
I'm going to put Chris on too.
Chris will have better comments.
Oh no,
Chris, what do you?
I'm not getting into this conversation.
It's funny. About 3 weeks ago, I was about to present something, and Chris pulled me aside before the meeting, and he said, "Hey Nate, you just have to be, moderate on political stuff." And I'm like, "Yeah, okay, all right." Yeah, I'm usually a little bit unfiltered on this. I've got my beliefs, and I don't do it necessarily just because of politics. I do it because I usually vote with where my biblical beliefs go. So that's usually where I'm pulling the line.
Mm-hmm.
So this election is going to be interesting. It's going to be interesting. Any early guesses, Sue? Who are you putting your dollars on? Who's going to win? Doesn't matter if you're voting for them or not, but who's going to win?
I just don't say anything political. I'm sorry.
I'll say it. Trump's going to win.
Think Trump will win? Yeah.
I do.
I saw for the first time now he's starting to lead in most of the polls, even the polls that are not usually favorable towards the right. So it'll be interesting. So let's just talk for a second about forecasts. Let's talk about both candidates. We did an in-depth training on this a while back, but if Kamala wins, more than likely we're going to see increased taxes. And that was kind of the big debate. And it's where we heard from a lot of our investors saying they were a little bit worried if that happened because taxes might go up. If Trump wins, we'll probably see more tax cuts. We'll see the extension of the Tax Cuts and Jobs Act. He's publicly talked about that. That's where you can get more tax benefits from buying a piece of real estate up front. So Terry says she agrees with you, Sue. No comments. Let's hear both scenarios. Temecula says, I'm with Nate. All right, cool. I will vote purely on my biblical beliefs. That's what I'm going to do. Okay. Well, let's talk for a second, guys, about the deal of the week, and then I'm going to flip this over to a little training section. Those of you that are looking to cash in on opportunity right now, if you're looking for deals and whatnot, I'm going to go through a training section on how you can actually go out there and find some using the household name Zillow. It's a tool that everybody's got at their fingertips, and there's some killer deals that are sitting out there for you right now. But before I do that, I want to talk for a second about our deal. Sue, actually, could I call on you for a second to talk about Dayton? You've been working with investors. We're going to talk about this machine shop for a second, but you've been working with investors now on industrial real estate for about the last year, maybe 14 months or so. The piece of industrial real estate that we're going to talk about in a second, what do you love about it? I want to hear from you first.
At first I didn't love it at all. I was like, what the heck do we know about machine shops? But I've been converted. I love them. It's something different than real estate. It's not tied down. With multifamily, you could only raise rents so high. If you raise rents above market rents, you're not going to get your properties leased out. With the shops, man, if you want more income, you get a new client, you get a second shift, you hire another worker. It's totally different. So it's been exciting. I've been really excited about it.
So what Sue's talking about right here is literally industrial real estate at its finest, CNC machine shops. We have a multifamily partner that ended up getting deep into machine shops. And he approached us and said, hey, would you guys like to participate? Would you like to partner in some of these? And we looked at it first from a real estate play, and we said, well, if for whatever reason the machine shop doesn't make sense, this piece of real estate does. Like, this real estate is fantastic. We've got a triple net lease, like, it's all good. And so that's what first opened our eyes to it. And then what happened is we got into it and we bought one, bought two, bought three, bought four, working on the fifth right now. And what's happened along the way is that we got to see the numbers. So this is the numbers from one of our shops year over year. And I just want to draw your attention to basically the average monthly, okay? Average monthly a year ago on this particular one was $50,000 per month. Average today is $67,000 per month. That's 30% plus an improvement year over year on this particular shop. And what Sue was talking about, like for us to go in there and grow the business, it's not overly complicated. The machining sector, specifically these machine shops, what's happening is that a lot of companies ever since COVID, they're bringing their work home. They saw supply chain issues during COVID. You probably experienced this yourself. If you ordered anything from overseas, it probably took a lot longer than it was supposed to take. And a lot of companies recognized after COVID kind of passed that they needed to do more manufacturing at home. In addition to that, because of some of the previous administration's tax cuts and benefits and tariffs, a lot of people want to do their manufacturing at home. They don't want to have to pay tax on it as well. So you're seeing a phenomenon called reshoring. Instead of offshoring, it's reshoring. It's bringing all of this production and work home. And in fact, last year was the biggest year for reshoring that we've had in 30 years. The trade deficit with China, it's something that sometimes you'll hear the national news pundits talk about. We had a 9% dip in imported goods from China last year. That's massive. Like 9%, it might not sound like a lot, but from one of the world's largest exporters that we import in the United States, that's a massive drop. And a lot of it is due to this reshoring phenomenon. So how does this work? Well, we're buying these and we're doing what's called a roll-up. Okay, I'll explain it by putting this pyramid on the screen. What happens is that when you've got a little tiny business, there's not a lot of buyers for it. People just aren't interested. They don't want to get in and buy a job. But when you start to scale, when you start to have several of them running the same way with systems, operations, procedures, et cetera, then people start to get more excited about it, like private equity groups. And private equity groups will pay more for a seasoned business, a business that's running professionally. It has all the branding done. It has all the procedures put in place, et cetera. They'll even pay more when it's doing more volume. So I want to go back for a second to this slide. Today, the shops that we have, they're doing about $860,000 per year net profit. EBITDA is the fancy name for it. Earnings before interest, taxes, et cetera. Net profit, think of it like that, 860,000. We're buying one more shop right now inside of this existing fund. It's called cash flow fund number 7. And our EBITDA jumps up, our net profit jumps up by over $500,000. It's actually north of $600,000, but we're being conservative on our slides and our marketing. And that's going to put us somewhere around 1.36, over $1 million in net profit coming in from these shops right now. The other part is that the shop that we're about to buy, will be the last one for this particular fund, is in Dayton, Ohio. It currently has a Department of Defense contract. Those contracts take years to get, and this shop already has one. So by adding this to our family of businesses that we already have, it really rounds out the portfolio nicely because we can trade work back and forth between the shops. We can cross-sell much better between them, and now we have a Department of Defense certification as well. So if this sounds interesting to you and you're like, hey, I want to explore that a little bit, we've got a few different rules here. We're in our business, we try to do really good for people's money and do good with the profits. We're not looking to partner with people that are looking to take the money and go out there and do something not nice to the world with. So we've got a few different criteria. Number one, we want to do a call. We want to get to know you. It's a mutual interview. We want to make sure that we've got a really good fit to work with somebody long-term. We have 3 different tiers for people to invest. Number one, if you're looking to just test us on a smaller dollar amount, this is for accredited investors. It would be $100,000, can get you an 8% preferred return. We have never missed a distribution on cash flow fund number 7. Every single distribution that's supposed to go out goes out. We had one quarter with a little bit of a delay as we waited for a customer's order to come in, but we've never, ever missed a distribution. Tier 2, this is for folks that are looking to do a little bit more. If you've got $500,000 or more, you can get into Tier 2, which pays a 10% preferred return, okay? In addition to that, I'll talk about the equity in a second, but it's a 50-50 split. I'll come back to that. Tier 3, this is for folks that like to do $1 million or more. If you're in that bucket, then basically $1 million or more gets you a 12% preferred return and a 50-50 profit split. all three categories, they get a 50-50 profit split. So you're literally, as we grow the business, as you see us do things like this, grow the bottom line, make more profit for the company, you share in that as well. So you get your preferred return first before the management team, that's us on this side, gets anything, and you get to be part of the growth of the company. So if that's interesting to you, then what you do is book a call with us. Sue, would you mind throwing that link in the chat? You're probably already a step ahead of me. Yes, you are. Book a call by clicking that link. If you're following us on social media and you don't see the link, just type the word call in the comments, CALL, and our team will get you a link for that. And we're happy to go through it with you and tell you what options might look like. So step 1, click the link. Step 2, choose a time that makes sense. Step 3, we have a back and forth two-way interview call and just make sure that we've actually got a good fit. And if we do, cool. If not, that's okay as well. Sue, did I miss anything that I should have said?
You could talk about some of the things we're doing. You know, we're hired a salesperson. We have a great general manager. He grew up on his daddy's knee in a machine shop. Plus he has military experience. So I like that part. We could leverage the Dayton shop with his knowledge there. We've created internship programs at local technical colleges. So the students are working, 2 days a week with us. They're gophers. We, show them around the shop, tell them what to do. And then they spend 3 days at school. And when they graduate, we hire them, so we're providing jobs, which is really exciting. And I don't know, it's just fun. I love real estate too, but in real estate, it's very reliable and dependable. The machine shops are also, but you could grow it faster.
Yeah. Yep. We love real estate at the core. Like that's our business. Those are a lot more cash flow. That's where you look at a business like this. Real estate is a tax play, an appreciation play, and a little bit of cash flow. But if you're looking for cash flow, then a business like this has got a little bit more of that. Katya, great question. What's the minimum investment? It's $100,000 is the minimum investment. And you have to be an accredited investor to invest in this one. It's not my rule, it's the SEC's rule. This happens to be a specific fund that's set up for accredited investors. So the SEC only lets us take accredited investment capital for this one. Cool, good questions. And
accredited investors make $200,000 a year if they're single, $300,000 a year if they're married, or they have $1 million in assets, not including their personal residence.
Sweet. Sue, you mentioned what else are we doing inside these businesses? I'll hit one more, and it's that we're bringing them up literally like one of the shops, Cincinnati, Ohio. This guy, he had owned it for 40 years. Literally, he just waited for customers to call, and he would take the order by phone. He would write it on a piece of paper. He'd walk out on the shop floor and post it to the wall. And that was the production line. That's all that he needed to do. He didn't need to do anything else. And we went in and installed an ERP system. It's basically a software that runs the floor. We hired a salesperson to go out and actually sell like a company should sell. We installed a CRM. That's a customer relationship manager. It's a software that lets you track customers. We did those things, and now we've seen significant growth inside the business just by doing some few technical upgrades. So these businesses that they've been long overdue for it. So we're able to cash in as a lot of the manufacturing comes back to the United States because of it. Cool. I'm going to flip over and do the teaching section. So I'm going to flip over here. We've had a lot of people asking how people can go out there and make a deal happen in today's market. And I'm going to do this from a very ground level, like easy way. So I was in front of 75 people on Saturday, and I got asked the question afterwards during kind of the Q&A time. Nate, if I were new in this business and I just wanted to get a single family house, how do I do it? Because the market's really tight right now. A lot of markets haven't churned and it's really tough out there. What would I do to go get a deal right now in today's market? A simple, practical way. And so what I'm going to do, I'm going to come in. I just went to Zillow.com, literally, and I want to click the buy button up in the upper left. And I want to show you a search. I'm going to pick a city. I'll pick one that I know. You could pick any in the country. I'm going to focus in on Cape Coral, and I'm going to come over here to this more button. And I want you to see something that's really cool. You scroll down to this search filter right here, keywords, and I'm going to type the word assumable. Now, let me ask you guys in the comments, in the chat section. An assumable mortgage is when you can go and take over somebody else's loan. Somebody took out a loan sometime in the past, let's just say 3 years ago when interest rates were really low, and now they've got this loan and they don't want the property anymore, but they're willing to walk away from the property and let you take over their loan. Assumable. Let me ask you this. How many do you think that we're going to find in your city, in your state? Do you think we'll find a lot or a little? Let me know in the comments, a lot or a little. Will we find a lot of these or a little? Because a lot of people think there's not many of them out there. A lot of people make the assumption that these things just don't exist. Ralph says a lot. Let's see. We're going to do Cape Coral. Okay. Now these little circles, they all popped up, which means that they match the key term assumable. There's two types of assumable in the state of Florida. Number one type is insurance. Sometimes they'll say, hey, my insurance policy is assumable, which is important in Florida because insurance policies, they tend to go up a lot. But this one is the other type of assumable that we were looking for. This one says low interest VA loan assumable. This is what you want right here. And no, you do not have to be a veteran to take over a VA loan. It's more beneficial for the seller if you happen to be a veteran, because then they can take their veteran credits with them on the next purchase, but it's not required. So you can come in as an average everyday person, a civilian, and you can take over a VA loan. So this one right here has a low interest VA loan. Now what I'm going to do is I'm going to put a second layer on this for you guys. I'm going to go down and I'm going to see when they bought it. So I'm going through the history right here. Looks like they've owned it for a while because it's not actually what year built was this one. This was year built 1996. Maybe they bought it brand new because I've not seen their sales price. You can sometimes see it right here. It'll pop up as a little circle and show their sales price. And then the other time you'll see it down here in the history. The reason that I like to look there, this one didn't actually have it, but the reason I like to look there is because I can see how much they paid for it. And more importantly, when they bought it. If they bought it in 2020, did they have a low interest rate or a high interest rate? Let me know in the comments. If they bought it in 2020, did they have a low interest rate or a high interest rate? Yeah, Amanda, you're fast. You guys are a good group. Yeah, low interest rate, lower than today. And so today's rate, if you go out to take out a single family home loan, you're probably going to pay somewhere in the high 6s, maybe even 7, depending on credit. Maybe you could buy it down and get it in the 5s if you paid for all the buy downs, but it's going to be much higher than it was just a couple years ago. So you can find deals this way. You can hunt down the deals, not based on the purchase price, but based on it being an assumable loan. And I'll back out and just look at one more as an example. Let's see. We'll go click on this one on Pine Island. It zoomed out on me. Click on this one. I'm going to scroll down. This seller's motivated. Look at this. Motivated. I want to see another one. VA assumable loan. And look at this interest rate. It's at 3.125%. The young man in the audience that asked me the question, he was at the event with his dad. His dad prompted him to say, hey, you know, my son just graduated from college. What should he be doing right now to get in the real estate game? Should he be buying? Should he be renting? And I said, look for these. Go out there and look for these. Afterwards, he thanked me up for it. But what you do is you look for the assumable, and then you go down, you see when they bought it. This one here, you can see all the transaction history. And you can see this particular seller bought it in 2021 for $360,000. So I would approach this one if I were interested in it, and I would make an offer that I could assume their loan, pay the realtor fees, and let the seller walk away. That's how I would do it.
Looks like that one would fit your entire family, Nate.
Yeah, yeah. Sue's looking out for me. Look at that.
Amber wants to know, she wants to see where you type in assumable again.
Yeah, this upper right-hand corner, right over here, where it says more, that's the magic button. Go into more. It's also the same on the app for the phone. It's one under more, and you go down to the very bottom where it says keywords, and you type whatever you want in there. So assumable is the easy one. Sometimes I will also look for financing like this. And the reason I'll look for financing is because sometimes sellers will offer seller financing. So I'll scroll down, I'll look in the comments. This one's not seller financing, so I'm going to skip it. But sometimes you can pick up and negotiate deals based on that as well. Seller financing. I'll scroll down again. Let's see. There is seller assisted financing for a qualified buyer. So that would be a version of seller financing. What the seller is trying to say is, hey, come buy this property from me. You don't have to go to the bank. You can make monthly payments to me. So you want to move to an estate in Florida with an alligator
No,
pond in the back?
They have those no-see-em bugs. I don't like them.
No. Oh, okay, we won't make you move to Florida. If you got more questions, feel free to fire away, but that's what I would do right now. If I were trying to find a deal in a market, I would look for the low interest rates. It's also very common in the commercial real estate industry to see assumable mortgages. So if you're looking for a 20-unit apartment building, you can also do the same keyword search. Just go to the commercial real estate platforms, look for assumable loans, and you might be able to score a much lower interest rate. So I'll just recap this really quick on the deal. If you are looking for a deal to invest in right now and you're an accredited investor, then we have one. It's an industrial asset. We are buying a CNC machine shop in Dayton, Ohio. It fits into our family of others that we already have in the area. It's all throughout the Midwest. We've got these shops. We've been growing these really well. I really feel that God's blessed us on these. The cash flow is coming in strong and we keep getting more and more customers. Every improvement that we make to them ends up adding to the bottom line. And they've done very well for us. We've grown by 37% year over year on one of our shops already. If this is interesting to you, then pay attention to this number. EBITDA, that's the net profit. We're at $860,000 right now on our portfolio of these assets. When we buy the next one, it's a Department of Defense certified shop. It brings us up to 1.36. So we're bringing an extra $500,000 in net income after we make this transaction. So it's really cool. It brings us on a high ranking scale on this private equity pyramid. It makes it more attractive for a potential equity firm to want to acquire this group of businesses from us. We are just a hair under 50% filled for this deal right now. We just opened it 1 week ago. We will fill it. This is every single time we've opened up one of these industrial assets in the past. They usually fill up in 2 to 3 weeks time. So if this is of interest to you, then book a call with us. You got 3 options. You got an 8% tier where you get a preferred return of 8% and 50% of the profits. You got a tier 2 option, which is when you come in with $500,000 or more. And on that one, you get a 10% preferred return and it's a 50-50 profit split. And the last one is tier 3, which is $1 million or more. We pay out a 12% preferred return and it's a 50-50 profit split. If that sounds interesting to you, then use the link in the chat to book a quick call. Or if you don't see the link, if you're following us somewhere online, just type the word call in the comments and we'll circle back around to you. Sue, before we sign off, is there anything else that I should have hit today that I didn't?
Well, you didn't do your prayer.
Let's end on that note. So I got to see one of the fellow speakers at the event that I was at. He started the event by talking about Quaker Oat. Quaker Oats, the brand, the oats. And he said how Quaker Oats founder dedicated 70% of all profits to doing kingdom work, doing good in the world. And it just blew me away trying to think about like, how do you run a business on 30% of the net profit? How do you survive? What this guy did was it was nothing short of miraculous. He just put faith in God and trusted it. So today I want to say the prayer over that. Okay. Dear Lord, please let everybody here under the sound of my voice find something that they can take, an investment, a business, their work, whatever it is, to multiply it, to do more in your kingdom, just to really manifest and spread the word of God, number one. And then number two, take care of people. Take care of people that are in need, because we all know right now there's a lot of people out there that need help. So please just let everybody be able to grow it and to be able to give more. In your name we pray. Amen. Ladies and gents, that's a wrap for today. You got 2 things from us this week. Number one, we've got a awesome training, Distress Asset Advantage, on Thursday. hope to see you there for that. And then number two, if you're looking for an investment opportunity, check out our industrial assets by clicking on the link that you see in the chat or type in the word call there. And I'll see you guys Thursday.